Welcome to This Explainer. There's this massive, persistent mystery out there. Have you ever wondered why the ultra-rich always, and I mean always, seem to pay less in taxes than the rest of us? Well, today we are cracking wide open the wealth blueprint. We're going to dive deep into their exact strategies, and more importantly, show you how you can start using them too.
Right off the bat, we get to ask the million-dollar question. Do they have secret loopholes? When it comes to taxes, it is so incredibly easy to just assume the whole game is rigged, right? That there are these hidden offshore accounts and shady backroom codes that the average person never even hears about. But honestly, the truth is way less Hollywood. It's really all about planning, not secrets. The wealthy simply understand the mechanics of the tax system and they make their financial moves based on that rulebook. There's no shady deal happening here. It's literally just pure, proactive strategy.
Let's jump right into Section 1, the wealthy tax myth. Let's clear the air on this right away because it's absolutely crucial to everything we're talking about. There is a massive, fundamental difference between tax evasion and tax planning. Tax evasion, that is 100% illegal. That's hiding your income, giving false info, breaking the law. But tax planning? Completely legal. It's the smart use of permitted deductions, credits, and legal structures. The smart money stays entirely within the law.
So that brings up a really interesting suspense point. If it's all perfectly legal, how do they actually turn these everyday rules into massive financial savings? What exactly are they doing right at this very second that you might be missing out on? Stick with me because this next part changes everything.
Moving right along to Section 2, the power of deductions. Okay, so the wealthy actively deduct things like business expenses, professional services, investment costs, and charitable contributions. But here is the real secret, and it's something I had to learn the hard way myself. They track these things all year long. It's a seamless part of their lifestyle. It is definitely not a panicked scrabble through shoeboxes full of receipts the week before tax day. Now, deductions are fantastic for managing this year's tax bill, sure, but we need to think bigger. To truly build real wealth, we have to zoom out. What happens when the wealthy plan decades into the future? What's the master plan there?
Which brings us to Section 3, tax-advantaged accounts. This is where things get really exciting. They use specific, targeted accounts designed for tax-deferred or entirely tax-free growth. Think about it. When your money is allowed to compound over decades, without yearly taxes constantly taking a bite out of your gains, the growth curve goes completely exponential. It's like a snowball rolling down a mountain, gathering mass. Now, if deductions and retirement accounts are just the baseline, you've got to wonder, is there a fast track to even more planning opportunities? Like, what is the actual next level up from here? Let's explore that in Section 4, Business Ownership Advantages. When you own a business, it completely shifts what is legally deductible. Suddenly, everyday operations like equipment purchases, software subscriptions, marketing expenses, even professional services become legitimate write-offs. Owners strategically invest in growing their business while simultaneously lowering their overall taxable income. It's a massive advantage over standard W-2 employment. Okay, so we've covered the deductions and the business structures, but we are missing the final piece of the puzzle here. How do the wealthy handle their actual market investments to avoid getting absolutely hammered by taxation? Let's break that down in Section 5, long-term investing. It turns out patience literally pays off. Doing quick flips and short-term trades, that triggers higher ordinary income taxes. But holding on to your investments for years, that unlocks incredibly favorable long-term tax rates. The system is literally set up to reward patience, giving you massive growth alongside a significantly lower tax bill. All right, we've uncovered some pretty high-level strategies so far. But let's bring it back down to earth for the absolute most important question of this entire explainer. What can you actually do? How do you apply this to your own financial life starting today? Let's build that out in Section 6, your tax blueprint. Here is your actual blueprint in 5 simple steps. Step 1, track your expenses year-round. Step 2, take the time to learn your eligible deductions. Step 3, stay incredibly organized with your records. Step 4, contribute consistently to your retirement plans. And Step 5, think long-term. Honestly, consistency is always going to be chasing shortcuts. If you take away just one thing today, let it be this. Success comes from understanding the rules, not secret loopholes. The wealthy aren't playing some completely different game with magic codes. They're simply playing the normal game with deep understanding, careful planning, and total unwavering consistency.
So, are you ready to start your own strategic tax planning today? Because tax planning is absolutely not just for millionaires. Start your financial education early, and the compound effects will completely blow your mind down the road. Look, if you found this explainer helpful, please hit that subscribe button for more financial blueprints. Now, I'd love to know, what is the very first step you're going to take today?